Okay, so let us start next lecture today. The topic is payment of tax. We have covered so many topics in the previous lectures. Current topic is a discussion on how to pay taxes. Now, if you remember, how do you pay taxes in GST law? Suppose we have done a sale of rupees 1 lakh rupees and GST rate is 18%. So 1 lakh is the value of supply and 18% is the GST rate. So that means you have to pay to the government of India 18,000 rupees. Now, how will you pay this 18,000? You have two options. Either you will use your input tax credit. That means the tax which you have paid when you purchased the goods or services. If I have to pay 18,000 on my sales as GST, suppose I have tax of rupees 11,000 which I paid when I purchased the goods. So out of 18,000, how will you adjust it? Out of 18,000, what you will do? Less input tax credit, which is 11,000, and the balance is how much? 7,000. 18,000 minus 11,000 is equal to 7,000. This 7,000 you will pay through online banking or whatever mode. But you have to pay this 7,000 from your own pocket now to the government of India. So what I wanted to show you in this payment of tax. I hope this board is visible. Okay, so see this point. My sales are rupees 1 lakh. Assuming the GST rate to be 18%, how much tax I am supposed to pay to the government? Now, how can you pay this? Assuming that I have my input tax credit of 11,000, what will I do? Less ITC. I will write ITC. And 7,000 I have to pay now through cash, banking transaction, or by any mode. This is how I pay the tax. So what we will study in this topic, payment of tax. In this topic, we will study the accounts which every registered person has automatically on its screen. Whenever any registered person opens the account under GST laws, for every registered person will open its dashboard on the portal of Government of India under GST laws. By default, there will be 3 accounts under its name. So what are those 3 accounts? One account is known as electronic cash ledger. My second account is known as electronic credit ledger. And my third account is known as electronic liability register. So these are the 3 accounts which I will study, which you will study in this lecture, payment of tax. Electronic cash ledger, electronic credit ledger, and third is electronic liability register. Now, as you can see, Which amount will go in electronic cash ledger? The amount which you will pay in cash or check, bank, by any mode, directly to the government of India. So this 7,000 in my example will be reflected in your electronic cash ledger. Whatever ITC you have claimed while paying your output tax liability, in my example, the ITC which you have claimed is rupees 11,000. That will be reflected in your electronic credit ledger. And it's a common account, electronic liability register. All the transactions of cash and credit will be automatically adjusted. So this will be automatically adjusted. You need to learn only these two accounts, electronic cash ledger and electronic credit ledger. In electronic cash ledger, what you pay will go. In electronic credit ledger, whatever is your ITC, that will be reflected. That's it. This is what my entire topic, payment of taxes. I hope the example is little bit clear. Now let me show you the act. Section 49 deals with payment of tax. So let me show you a screen with you. Let me show a screen with you. I hope the screen is visible. Is this screen visible? Kindly reply through chat window. Is this screen visible? Okay, great. Now before this screen, let me show you the original act. Now you can see on the screen. I hope the screen is visible. Can you see this act? It is CGST Act 2017. Can you see this act? Hurry up, kindly reply fast. Can you see the act? Can you see the screen? Yes, great. Now see this. Payment of tax. It is section 49. Payment of tax, interest, penalty, and other amounts. So we have to do only section 49. And there are so many subsections in this section 49. 49 subsection 1, subsection 2, subsection 3, 4, 5, 6, 7, 8, 9. That's it. So we have to do section 49 and subsections 9. So I wanted to show you this original. So from where we are reading this payment of tax concept, we are reading this concept from section 49 of the CGST Act 2017. Now let me simplify this act in my own language with you. Now this is the new screen which you can see. Payment of tax. So I'm discussing section 49, payment of tax. So let me discuss the relevant points. First point, amount deposited is credited in electronic cash ledger. I just showed you this point in my example that when 18,000 was the output tax which I am supposed to pay, but 11,000 was my input tax credit. So I am required to pay 7,000 to the government. So whatever I will deposit, this 7,000, it will be reflected in which account of mine? Electronic cash ledger. So whether I pay any tax or interest for late payment of tax or penalty for late payment or any fee or any other sum, whenever any person pays this amount from own pocket directly to the government, that will be reflected in that person's electronic cash ledger. This is first point. Second point, whatever ITC I will claim, that will be reflected in my electronic credit ledger. So my input tax credit will be reflected in my electronic credit ledger. So my electronic credit ledger will be credited with the amount of ITC. Now, how I can utilize my amount which is in my electronic credit ledger? Third point. As we remember that which amounts are reflected in your electronic credit ledger? Only input tax credits. Your cash payment is not reflected in electronic credit ledger. So only input tax credits are reflected in electronic credit ledger. So how can you use your input tax credits? I can use those only to pay my output taxes, whether it is output IGST, output CGST, output SGST, output UTGST. How I utilize my ITC? That I have already discussed in detail in the chapter input tax credit. If you remember those provisions, what were those provisions? That input IGST can be used only for first preference, output IGST. If balance remains, then that input IGST can be used for output CGST or output SGST, as the case may be, in any ratio, in any proportion. I'm not going to discuss this point in detail because I have already discussed this in detail in the chapter input tax credit. I only wanted to make sure that you can revise this concept. So how can I use my amount of electronic credit ledger? It can be used to pay my output tax in whatever ratio, whatever proportion, that is another concept. Next point, whatever balance will be shown in your cash ledger or credit, what will be happen for this? What you will do with this? Government will simply refund this amount as per the provisions of refund chapter. So entire balance in your credit ledger and cash ledger, you are entitled to get a refund. Now how you can claim this refund? That is separate concept. So we will discuss a separate chapter, refund, later on. But you are eligible to claim that amount as refund. What will be reflected in your electronic liability register? All the output taxes, all the fees, all the penalties, etc. Whatever you are supposed to pay, that will be reflected by default in your electronic liability register. And when you start paying those amounts, that will be deducted and automatically this account will be tallied. So all the liabilities which you are supposed to pay, for example, your output tax, fees, late payment, interest, etc., all will be reflected by default in your electronic liability register. And there are only two options to pay GST. Either you pay through bank or cash, and second is through your ITC. That's it. how do you discharge your tax liabilities? What is the way to discharge tax liability? What is the order of discharging tax liabilities? Now suppose I have to pay 2 lakh rupees as tax to the government. So first I have to pay which amount? Tax of my last year periods. So this is first preference, that I have to pay first my previous year taxes if these are still unpaid. After paying of my previous year taxes, then I can come to pay what? Current year taxes. Now this is the order of sequence which you have to follow while discharging your liability. First, clear all your previous dues. Second stage, after clearing your previous dues, now you are entitled to clear your current dues. And third, after clearing your current dues, any amount which you have to pay under section 73 or 74. Now what is section 73 and 74? These are related to some penalties. I have explained these below, that these deals with what? Section 3 deals with what? Tax not paid, tax short paid, tax by default refunded, ITC wrongly availed, utilized, etc. So 73 and 74, these taxes you get to know later on when the department will check your returns. So if on that basis department comes to know that, for example, 5,000 tax is not paid by you, then that is the third stage. First, clear all the previous year dues which you think are true. That is why we say self-assessed. In second stage, clear all your current year dues which you think are due. And in third stage, you have to clear those dues which are payable under section 73 and 74. These are not self-assessed, because at the time of filing return, you were not sure that in future some wrong thing can arise or wrong ITC, etc. These can be verified. So this third stage is not for self-assessed. It is technically assessed by the department. So that is the third stage. So this is the order of preference of discharging the GST liability. First, whatever you think is true for previous year, pay those dues. Second stage, whatever you think is true, pay those current dues. And third stage, what department comes to know of any situation where you have paid less tax or you have wrongly claimed ITC, then that payment is your third stage. First, clearing your 2 stages of self-assessed taxes, then you are supposed to pay the taxes under section 73 and 74. That point. Next point in payment of tax. Remember, in payment of tax, we have only one section, section 49 to be completed. Next point. Deemed passing of full incidence of tax to the recipient of goods or services or both. By default, it is assumed that if I am the supplier, if I have purchased a laptop of 50,000 rupees by paying 10% tax. So I purchased a laptop of 50,000, add 10%, 5,000 GST. So total value in my hand is 55,000. Now I sold this laptop at 80,000 rupees to Mr. X. How much is the tax then on 80,000? Suppose 10%, 8,000. Now what this point says, that by default it is assumed that every supplier will pass the tax paid by him. In my example, how much was the tax which I paid when I purchased this laptop? 5,000. So it is compulsory, or it is assumed that I will pass this 5,000 to my recipient. By default, it is the provision in the GST laws that deemed passing of full incidence of tax to the recipient. By default, it is assumed that every supplier will pass whatever tax he or she has paid when he or she has purchased the goods or services to the recipient of goods, unless the contrary is proved by him. If you have not passed as a supplier the incidence, then you have to prove it to the department that you have not passed it. Otherwise, by default, it will be assumed that every supplier has passed the incidence of tax to the recipient of goods or services. So the chain is necessary to be going on. Always every supplier is deemed to have been passed the entire tax which he or she has paid to the next recipient of goods or services. This is the point. Now, everywhere we have used where in section 49 tax dues, it means only GST. Tax dues, if somewhere the word written is tax dues in section 49, it means only GST. And other dues, wherever the word is used, it means other than GST, interest, penalty, fee, or any other amount. In total, there are only 5 things which you have to pay under GST laws. Either you will pay GST to the government, fee to the government, interest to the government, penalty to the government, or any other sum. Tax dues means only GST. What are extra then you pay above GST, like interest, fee, penalty, or any other sum, that is not known as tax dues, that is known as other dues. This is my section 47. Any problem? You please ask me through chat window. If you have any problem in section 49, you can ask me. If it is clear, then we can proceed. I'm waiting for your reply. You can again make a quick revision of section 49. First point, whatever you deposit will be credited in your electronic cash ledger. Whatever is your ITC, that will be reflected in your electronic credit ledger. How you can use your electronic credit ledger? That means how can you use your ITC? You can use your ITC to pay output tax. Fourth point, whatever is the amount available in your electronic cash ledger or electronic credit ledger, you are entitled to claim that amount as refund. Fifth point, all your liabilities, tax, interest, fee, penalty, or any other thing will automatically be reflected in your electronic liability register. How do you discharge the liabilities and other dues? First, self-assessed GST and other dues of previous year periods. Second, self-assessed GST and other dues of current year period. And third, amount which is determined by the department under section 73 and 74. By default, it is assumed that the entire incidence of tax which supplier has paid when he or she has purchased the goods is forwarded by that supplier to the next recipient of goods or services or both. That's it. Then some details of these ledgers are clear. Types of electronic register and ledger. So there is only one register, electronic liability register, and there are two ledgers, electronic cash ledger and electronic credit ledger. So there is very brief introduction of these three accounts. So by default, it is about electronic liability register. By default, it is maintained on the common portal. It is the website of GST. For each person who is liable to pay whether tax, interest, fee, penalty, or late fee. So it is automatically opened. And all the amounts which I am liable to pay to the government by default will be debited to this register. All the amounts which I am liable to pay will be debited to this register. First point. Now, how do you clear this debit balance? Electronic liability register. How do you clear this debit balance? We have only two options. Whatever is the amount payable, that will be debited in this electronic liability register. Now, how do you clear this? How do you clear this? So there are only two accounts to clear: electronic cash ledger or electronic credit ledger. There are only two things which can clear your GST liabilities. Either you will clear that liability through ITC or through cash. So this is the point which is written in point 3. The payment of every liability has to be made by debiting what? Either electronic credit ledger or electronic cash ledger. And when you debit those ledgers, by default, you will credit electronic liability register. So automatically cross entry will be there. First, whatever amount you are supposed to pay, that has to be shown in electronic liability register. And how do you clear this debit balance of electronic liability register? On the credit side, you will set off this amount through what? Either electronic credit ledger or electronic cash ledger. That's it. Now there is no need to read all these points of electronic liability register. You can refer only 3 or 4 points maximum for a theory question. That's it. Similarly, you can learn around 3 or 4 points of electronic cash ledger. Let me show you this electronic cash ledger. Again, it is also necessary by default. Cash ledger will always be maintained on the common portal for each person who is liable to pay tax, interest, fee, penalty, or any other sum. And why this electronic cash ledger is required? For crediting. Why it is required? For crediting the amount which you deposit and for debiting the payment which you make. So whatever you deposit, that will be credited, and whatever you will withdraw to pay tax, that will be debited. That's it. Now these are some of the modes given, that how you can deposit your taxes: internet banking, credit card, debit card, NEFT or RTGS from any bank, over the counter payment, etc., etc. These things are not required. These are procedural things, so these are not so required. Again, these all are procedural things. These things are not so required. Not so required. And last, third, electronic credit ledger. Again, by default, first point is same for all the three accounts. The electronic credit ledger will be maintained on the common portal for each person who is eligible to claim ITC. An entire claim of ITC will be credited to this ledger. That's it. So what I have discussed, section 49. Then I have discussed very briefly electronic liability register, electronic cash ledger, and electronic credit ledger. Now, if you have seen the news in the past 4 to 5 months, there has been deducted huge tax evasion in tax credits. So many people have created bogus receipts, bogus purchases, fraud purchases. On those basis, they have claimed wrong ITC. So very recently, a new rule was inserted, Rule 86A, and what it says: conditions of use of amount available in electronic credit ledger. Because electronic credit ledger is your self-assessed. Whatever you say, government accept it. It is self-assessed ITC, input tax credit. So there have been issues in this self-assessed ITC. So what this rule says, it puts some limit and restrictions on this ITC. If the commissioner or any officer authorized by him, not below the rank of assistant commissioner, having reasons to believe, if the commissioner believes that that this credit is fraudulently availed, that means it is shown by way of fraud, or the person is ineligible to claim this ITC. So how you can treat that as fraud? If that ITC is taken on the basis of those invoices which are issued by that person who is not available. If any invoice, when I purchase the laptop, in my example, suppose I have purchased the laptop from Mr. Y, and Mr. Y is, for example, a registered person, but he was not found by the department. These are treated as fraudulent means. Or I have taken this ITC without receipt of goods or services, or both. These are taken as fraud means. Similarly, I have taken ITC, but that tax has not yet been deposited to the government. The person from whom I have paid this tax of 5,000, that person, I have paid the tax of 5,000 to that person, but that person has not deposited that tax with the government and I have claimed ITC. Government says it is not allowed. Similarly, if I don't have any tax invoice with me, if you remember the chapter tax invoice, if you remember the chapter ITC, what are the conditions to avail ITC? That I must be having that document. Suppose I don't have the document and still I have taken ITC, then all these cases are treated as fraud or ineligible. So in these cases, commissioner has a power not to allow this ITC. That's it. So this is the only point which says that conditions and restrictions in claiming ITC. That if you have taken ITC without receipt of goods, if you have claimed ITC without and you don't have the document to show that your purchase document, if you have taken ITC and the person from whom you have purchased, that person is not found by the tax department. So in these cases, it is the power of the commissioner to disallow the ITC to you. That's it. Now this is my first concept. If you have any doubt, you ask me. My first concept, payment of tax, is somewhat over. Then next section, interest on delayed payment of tax, section 50. My section 49 is over. And let me show you the next section, 50. That if you don't pay the GST on time, how much interest you have to pay to the government along with that GST. Now the interest rate is 18% per annum. If you don't pay your GST on time, then you don't have to pay only GST then. Along with the GST, you are supposed to pay interest also on whatever outstanding amount which you have not paid, and the rate is 18% per annum. Next point. Suppose by fraud means undue claim of ITC or undue reduction in your output tax. My earlier concept was I have not paid the GST on time. Now this is which case? Though I have paid the GST, but I have taken wrong ITC while paying that GST, or I have fraudulently reduced my output tax. Then government says you have to pay that much of GST which was fraudulently availed by you, that much of GST which you have not paid by taking the benefit of fraudulent means, along with the interest at highest rate. It is 24% per annum. So how much is the interest which is applicable on GST? So there are two interests. First, if you don't pay the GST on time, then you have to pay the GST as well as interest at the rate of 18%. Second, you have paid GST, but when department found that what GST you have paid, that is by taking fraudulent means, by undue benefit of ITC or by unnecessary reduction of output tax, then you have to pay that much tax GST which you have saved along with interest at the rate of 24% per annum. So let us have a break of 5 to 10 minutes and we will start the remaining sections in the next lecture.